Welcome to another Time for Advice interview. Today I'm with Jonathan Gunby, CEO of Transact and Executive Director of IntegraFin. Jonathan, firstly, thank you very much for joining me today. I know this is a particularly busy time of year for you.
Yep, always busy.
Always busy. Well, to start with, it'd be really good just to get a little bit of background as to who Jonathan Gunby is and how you sort of worked your way to become CEO of Transact. But also, it'd be good to hear your thoughts on the state of the platform market, where it is today, where it's going, and Transact's role in that.
Sure. So, well, I've been in financial services a long while. I know I only look 21, but trust me, I've been in the industry a long while. So I actually joined the industry straight from university. Was a graduate trainee and did the classic training. So spent my time in underwriting and administration and sales, etc. And probably, like a lot of advisors, love the industry and have stayed in financial services ever since. I've actually worked for both life companies and fund managers. And then after a period working in industry, let's call it, I actually moved to the consulting side for a while. Yeah. I thought I'd do that for 5 years, loved it, and actually did a lot of consulting both internationally with life companies, fund managers, and that was in both developed markets and less developed markets, so Australia, North America, as well as places like Southeast Asia and parts of Africa. So that was fantastic, actually. I really enjoyed it. Although, to be honest, there's only so many years you want to be jumping on planes and doing that type of consulting work. So I decided to move back into industry, and I've actually been with Transact for 10 years. Okay. So, and I was a director of Transact, or Integrated Financial Arrangements is the formal company. So I was a director before I became CEO.
So the platform world, obviously Transact really was the beginning of that movement away from sort of traditional packaged products into a more sort of flexible world for placing investments in various wrappers. So what do you think about the platform market today, and where do you think it's going? And obviously, what's the role of Transact in that journey?
Yeah, well, I mean, Transact's a sort of fairy tale story, really. English guy living in Australia and spotted the opportunity to bring platforms to the UK. So Mike Howard, and then partnered with Ian Taylor to implement it. I actually knew the business right at its inception, but I thought I'd wait till Mike and Ian had sort of proven it before I'd dare actually join, and they invited me to join after about 10 years. So Mike and Ian did all the hard work, and once the models was built, then I joined to basically help grow the business, and we've been doing that. And the outlook for both advisors and for the platform world is fabulous. And the reason for that is that platform customers on the whole are very happy. Yeah. The number of clients that say to me, I've never felt as organised. Now, most of that's the advisor that's got them organised, but they can see everything in one place. And they really appreciate that. So they feel organised. But the big thing is the fundamentals. So there's 3,200 billion of client assets in the UK. All of that can move onto platforms. At the moment, advice platforms are just over 600 billion. So there's a hell of a lot to go. So there's lots of assets that can still move onto platforms. And moreover, it's always being replenished, whether that's through auto-enrollment or other savings or direct holdings. It's always being replenished, so we'll never empty it. Yeah. So that's why the analysts and the stock market is very bullish on the wealth space, the advisor space, and platforms in particular. Okay. So very bullish.
So great future.
I think so. I mean, since I joined, we had 9 billion when I joined, and I've just been in the right place at the right time, and the assets have grown to 50 billion in that period, and other platforms have also done exceptionally well. We're in exactly the sweet spot.
Fantastic. Well, that's a success story and a half, because of course I remember Ian right in the early days, because we had dealings with him at Key Software, our former software company. So yeah, it's been really interesting to sort of track the journey and to see how the industry has fundamentally shifted away from the traditional packaged products offered by product providers to a more fluid and flexible solution called a platform. So over the years, of course, we all read various industry reports about platforms and what advisors' expectations are and all that sort of stuff. And it seems to me that there are three areas that advisors are constantly pushing platforms to do, and namely provide better functionality, reduce the costs, and provide a better service. So where do you sit in that sort of I mean, how, as a platform, leader of a platform business, how do you address those primary concerns or needs from your advisor customers?
Yeah, so for Transacts, we have the big advantage of being, very focused. So all we run is the platform. We don't want to run anything else. That's enough. It's big enough for us. We're UK only and we're advisor only. And that means that advisors talk to us all the time. And I'm thankful that they give us feedback, good and bad, and tell us where we need to improve. I would say of all the functionality changes on Transact, 80% have come from advisor suggestions. So, occasionally we have a good idea, but a lot of it is talking to advisors. We release the software every 4 weeks. And even through the pandemic, by the way, we've managed to sustain that, which I'm very pleased about. Sometimes people say, well, Transact technology is old. Well, it's not, because you might find one word that goes back 20 years, Transact, but all the other code just gets replenished the whole time. So the functionality changes. As we entered the pandemic, I changed the priorities of build. We were a bit behind with regards to online applications and acceptance of digital signatures. So I stopped some other developments and accelerated those. And nowadays you can open a portfolio or pension and ISA and DocuSign it or all online. So we're back in the leading pack in terms of that functionality. But you've got to release all the time. We always have a list of things that we want to do, and we'll never get to the bottom of that.
Well, business never stands still, does it? No. Businesses continue evolving. The demands and needs of our customers and their customers is changing. Yeah. And, the pandemic we'll talk about a little bit later, but I mean, that has rapidly changed the whole way of doing business, hasn't it?
Yes, it has. So that's on the functionality side. Yeah. With regards to the pricing, then the good thing about platforms is you get economies of scale. Once you've got through, a hurdle of assets, a few billion, then you enjoy economies of scale. There's only so many accountants you need, so many compliance managers, monitoring officers you need, so many actuaries you need, thank goodness. So you do enjoy economies of scale. And with that means you can reduce prices. So what we try to do is balance between shareholder returns, paying staff, and reducing prices. So we've managed to reduce prices every year for over a decade, and we'll continue doing that. So not forever, because then we charge nothing, but for quite a few years we expect to be gradually reducing charges further. I mean, our total revenue yield's about 25 basis points. So it's not enormous. Yeah. Actually, when the platform started, it was over 60. Wow. So it's less than half it was 20 years ago.
Fascinating. But as you say, economies of scale. Yeah. And being sensitive to the requirements of the financial advisors themselves and also their clients, who I'm sure have become much more cost aware through the various regulatory initiatives over the course of the last few years. I mean, we've seen unprecedented change, haven't we? Yeah. Certainly since RDR.
We have. And then on the service side, I mean, service is paramount. And Transact has, built its reputation on service. Yeah. And one of the things that has been tough over the past year has been maintaining that, combination of things, working from home, illnesses, and difficulty in recruiting and particularly training people during the early months of the pandemic, especially, have been challenging for us and others. So our service standards are haven't been where I want them to be, and they've not been quite our usual standard for the past few months, actually, which I'm very disappointed about. However, it's not because the staff don't work hard. They work incredibly hard and incredibly loyal. So we've been recruiting more staff over recent months. It's become much easier to do that. We've opened a second office in Chelmsford. We've got a number of temporary staff in Chelmsford as we're restoring those service standards. And I actually got the latest Platform quarterly report yesterday, one of the many independent reports, and I was pleased to say that we retained the top position. Our service came down a little bit, but so did everybody else's, pretty much everybody else's.
Which I suppose is inevitable, isn't it?
Yeah.
I mean, given what's happened over the last couple of years.
Yeah, so advisors have been very patient, which is great as we restore our services.
Well, I think the important thing is that you're not denying it, you're open to it, listening, and recognise that there's work to be done.
Yes.
And to be perfectly honest with you, as I'm sure every business who sits at the top slot of service delivery is always going to have a challenge.
Yes, that's right.
But certainly, when we're out in the field speaking to advisors, those that use Transact always speak very highly of the service proposition, especially.
Well, that's good to hear.
Naturally, they'd like to see a reduction in the fees, but I suppose that's just inevitable, isn't it? So moving on to advisors' businesses, particularly around the use of technology. I mean, we all know that given the current state that we live in, a lot of advice firms are using technology that was built 15, 20 years ago on the wrong business model, and in order to fulfill their service to their clients have to complete multiple disconnected systems. And that particular spotlight was shone on by the Lancat and the Origo white paper, A Disconnected World, the Advisor's Reality. Did you ever read that?
I did, yes.
Yeah, I thought it was really fantastic. And it sort of highlighted the fact that the average advisor has to complete 7 standalone systems in order to deliver their service proposition from the initial advice through to the servicing of that advice and the ongoing review, which is bonkers if you think about it. We're in the 21st century. So connecting the industry to make life easier for the advisors is what we're about. It's our mission. We want to differentiate our services by enabling that connectivity to work, but in a meaningful way rather than based around some sort of sizzle or a sales pitch. And it's very close to what we're trying to achieve at Time4Advice. But what about Transact? What's your view and what are you doing to make advisors' lives easier?
We also want to do things that make the advisor's life a lot easier, and I totally empathise with the or just tedium of having to work with so many different systems within an advisor practice. It costs them money, it's very hard to keep the data synchronised, etc. So we're very keen to assist advisors in this. At the moment, what we do actually send valuation data daily to over 50 third parties as advisors request us to do so, but it is just valuation data at the moment. We would like to integrate further to help advisors with their reporting and the client reporting to clients, and indeed there might be efficiencies in there for us as well, particularly in terms of receiving portfolio and wrapper applications, so that onboarding piece. One does have to be careful in the way these processes are designed, that a third-party software provider isn't unwittingly doing regulated activity. So you have to be I think that one has to be very careful. And one thing about consulting in different territories, I've seen all sorts of horror stories where that's where that can go wrong. So you just got to be careful on that. And the other thing is data security. So the advisors and the platform, we have responsibility for clients' data. Of course, the more places you send that, then the risk goes up. So one has to be careful of that as well.
So this is a bit of a hot topic, I guess, because it's been in the press quite a lot. And I know we've talked about it historically. I'm going to be really interested, and I'm sure our viewers will be really interested in your views about this. So, it's long been recognised that advisors can gain significant operational efficiencies by consolidating onto a primary platform, because of course the industry has come from a world where of course product providers were selling lots of packaged products. The legacy products that exist today are the root cause in many respects of the inefficiencies that the advisors have to address as they try to aggregate values in order to give a more holistic advice. But over recent months, there's been a considerable amount of industry discussion around firms owning the platform that they run. And of course, you can clearly see the pros, maybe not the cons. The pro, of course, is you get a bigger chunk of the potential value chain. So what would you say to firms who are considering this approach? What are the cons? What are the issues that they need to be aware of? Because fundamentally, you've been doing this for 20 years, you know better than anybody, what the challenges of running a platform are.
Yeah. Running a platform's challenging. There's a hell of a lot of moving parts in operating a platform. I think some of the solutions that have been created were probably for private banks and large discretionary managers with advice arms that probably had some scale. I mean, I think to operate a platform, you really do need a certain amount of scale, because you're going to need more resource. And if I think about the economics, our income is 25 basis points and my cost base is about 12 or 13. So I'm running 500 staff, well, actually including the developers, a lot more, getting on 600 staff on around 12 basis points. And that includes actuaries, accountants, software developers, custodial accountants, etc. All the regulatory work and risk of doing this. So I think for an advice firm considering their own platform, I would say be absolutely clear what responsibilities you're taking on, and therefore the resource you would need to do that and the cost of that resource and the risk entailed, and then decide if it's worth it. And some firms will conclude that it is. My personal view is I suspect the majority of firms will prefer to concentrate on what they're really good at, which is actually the hardest bit, dealing with the client and giving the advice, rather than the detailed, complex world of running a platform.
Well, it's a very different business, isn't it?
Totally different business. We're administrators, custodians, and organising trading.
So in terms of tipping points, I mean, how many billions of pounds of assets would you need even to contemplate this sort of approach?
It depends how you organise your own operating model and how you do it. I mean, for me, I'd certainly want a few billion before I even considered it from my perspective, just because you need quite an overhead to do it properly. And if you do it on slim resource, it will be stressful.
I guess before firms take the jump, perhaps they should give you a call and have a conversation to hear it from the horse's mouth, so to speak. Because 20 years providing the service.
If you run a platform, you have hair like this, very grey.
Yeah, fair enough. So Jonathan, I know it sounds difficult, or it seems difficult to say this, but or interesting to say this. It's now almost a year since IntegraFin acquired Time4Advice. Can you believe that?
Amazing, isn't it? Yeah.
I mean, how time flies, it's extraordinary. Clearly, the reason why Time4Advice was looking for investment in the first place is we were looking to accelerate our growth. We believe there is a wave coming. People are increasingly recognizing the need for modern technology, connected technology, to allow them to deliver greater efficiencies. And the disconnected world that we talked about earlier is just not tenable. Really, we have this incredible advice gap, which is talked about all the time, where financial advisors probably service about 3 million people out of a population of 30 million people that potentially need advice. So something's got to change. So, we're clear, by working with you, in fact, indeed, by you acquiring us, it gave us the resources that we needed to accelerate our growth, accelerate the investment in CURO so that people can get more value from CURO quicker. And that's absolutely where we sit, and so far so good. We're certainly enjoying being part of the organisation. But from your perspective, why?
We've always liked to collaborate with service providers to advisors, and we would like to integrate much more with various providers, and it's complex. To integrate what we do on a platform with a back office system is complicated. It's more complicated than people might first think, not least because of the security arrangements that one needs in place with the ever-increasing cybersecurity threat. And we therefore felt it was always part of our stated strategy that we would look to consider acquisition of firms that we liked, that we could integrate with. Yeah. And we thought, wouldn't it be much better we're control freaks anyway, so we like owning things. That's why we own the platform technology and the insurance companies. And we thought it's going to be much better if we own a back office system that has some good track record, but then we can work with them in real detail to organise the various integration. And we'll come on to what that integration might be. And if we do it with one firm and learn how to do it properly, but build it in a way that we can replicate, and so can that back office system, so that Time4Advice can work with other platforms and we can work with other back office systems. But to actually perfect the technique, we thought it was much better to do it with something that we could, fully immerse ourselves into the detail. So that was the strategy. And we like the Time4Advice business because it's much more modern than many of the other platforms, and had a philosophy of partnering and collaborating that we liked. You happy to partner with cash flow modelling tools and all sorts of things in the same way that we do, which we like. So of course we had quite a lot of mutual clients, which is helpful because it gives us a nice base to start.
But is there a hidden agenda? We talk to a lot of clients, a lot of prospects, especially at the time of the acquisition. And the subject I'm about to broach with you, because we talked about it even before the conversation, before we joined forces, so to speak. There's a lot of benefits of vertical integration, isn't there? Where you've got a trading entity, a CRM system, and the value proposition that can come as a result of that. So is there a longer term strategy to sort of drive a vertically integrated proposition like True Potential or Benchmark, or is...
We do not want to own advice firms. It's not what we do. We strong believers in the independent proposition. We think the best advisors are independent advisors. And so we much prefer to concentrate on what we're good at, which is manipulating data, administration, trading, etc. So we don't want to own advice firms.
Well, that's good, because as I say, as we discussed, that was something I was very keen not to do, because we've seen technology companies that have launched into the market to provide back office services to financial advisors, and then during the course of the relationship they've sort of morphed into something completely different, which is great for the owners of the company, the technology company, but less so for the advisors, who suddenly find they're being sort of corralled into a way of working perhaps they didn't want to be.
We observed a few years back that some of our ad users sold out to vertical integrators, and that caused us some concern. So what we did instead was organised matchmaking. So it's a service we offer whereby if we've got a firm that's a seller, we try to match them up with a firm that's a buyer. Not the easiest thing to do, but we've managed to do that for about 3.5 billion of assets. Firms representing about that amount of money. So quite a lot of firms. And we also collaborate with a company called Virtus, who provide funding for acquirers if they need it. And that's exclusively with Transact. We help set that company up. They've I don't know how many deals they've done now. Must be getting on 30 deals. So yeah, it's good.
Well, that's a great service, because there's a lot of consolidation going on where firms are recognising that to continue as a very small business is probably becoming increasingly untenable, especially with the regulatory overhead that comes with a regulated business. I mean, that's never going to get easier, is it? So to offer that sort of marriage service to help firms move to the next stage of their development, as will inevitably come about if they're successful, sounds like a great service.
There's more buyers than sellers always, by the way. Yeah.
That's also interesting, isn't it?
Yeah, it is.
That the fact that there is an appetite, for that sort of pulling businesses together. We've seen it massively, and a number of our larger firms are just hoovering up firms to grow into much more interesting businesses and stronger businesses, I think. Because again, it's all about economies of scale, isn't it?
It is, yeah.
So we talked about the integration between CURO and Transact. So how do you see the integration benefiting clients of Time4Advice, benefiting clients of Transact, and prospects and potential prospects for both Time4Advice and Transact?
I think for advisors, it's about efficiency and quality of service to their clients. So we will, as you know, Roland, we'll be one step at a time, and we'll do it thoroughly. So we'll probably start off with things that advisors will find really useful, like remuneration data. So it makes their reconciliation reporting so much easier. So we'll start with something like that. And then I'd see us move into areas like client reporting, which is quite a big one. We've done that before, fortunately, because it involves moving quite a lot of, an enormous amount of data to on behalf of advisors to Time4Advice. We're requested to do so to enable client reporting. So I'd see that as a next stage. I'm quite excited about something we've been calling auto setup, whereby if the advisor wanted us to, we could actually give a whole load of historic bulk data to Time4Advice, so they could get a quick start basically with all that historic data. I think that's quite exciting. And then the other one, of course, is onboarding, which would benefit the client, the advisor, and Transact, whereby if all the data is captured within CURO, why wouldn't we populate application forms, etc., for Transact and have those all submitted electronically? So I think it's one step at a time, and it's going to take us a while to do all of that, but we'll do it thoroughly, and we'll do it. And the key thing is we'll do it very securely. We do find that, particularly between advisors and clients, that electronic communication between advisors and clients is attacked a lot by hackers. In fact, we're putting some videos out on this, some security tips on this for advice firms. So I think security must come first when we design all of this.
Well, I can certainly see the benefit, and what we talked about earlier, because I would say that a lot of your clients are relatively small firms, aren't they? But they are incredibly loyal. They put most of their assets, if not all of their clients' assets, on the Transact platform. And so the strategy of being able to, and they of course are also frustrated by the lack of connectivity to a solid practice management solution, a CRM system, which is future-proof, which of course CURO is. And so the thought of building a very easy to deploy CRM platform, leveraging the Microsoft ecosystem, of course, that we're very, very plumbed into, with pre-population of their clients and their assets directly into the system for reporting issue rehearsed is, I think, quite exciting. Certainly from my perspective, it opens up a whole new opportunity. Yes,
I think the communication portal is an interesting area. I've had a few advisors say to me, it's a bit difficult for my clients because I communicate with my clients through a back office system, but my client also has login details for some legacy life insurance products with whoever, has login details for Transact Online as a client, and it's quite confusing. So if I could consolidate my client communication through a single communication portal, but still provide the Transact reports, etc., that would, and let's say some legacy life company reports, that would be ideal. And I can totally understand that from the advisor's perspective.